I'm Charlotte McLeod with investingnews.com, and here today with me is David Morgan, publisher of the Morgan Report. Thank you so much for being here. Great to have you as always.
Charlotte, I always enjoy our conversations.
Really good to be speaking with you, and I think it's a perfect time. And what I want to mostly go into with you today is silver. I've been seeing over the last week or so, probably longer than a week at this point, but these posts on Twitter about the silver squeeze. And I'm hoping that you can help me dig into what's going on here. So from what I can tell, this is a movement that originated on Twitter, and the plan is essentially to buy silver on March 31st. But what are you seeing? Can you help us understand?
Sure. Well, first of all, the original silver squeeze came after the GameStop, I guess I'll call it fiasco, where this one gentleman really put out the word that there was a huge short position in GameStop and got a big following, and people kept buying, and the shorts really got creamed, a lot of them. And so after that happened, and that was on, I think, Wall Street Bets, there became a entity called Wall Street Silver, I believe it was. And the whole idea was basically to perform a similar situation with silver, but silver is a different animal. I mean, you're looking at a commodity versus a stock. You're looking at different rules. You're looking at different leverage. There's a lot of different things. But anyway, that took place. So along came silver squeeze, and I forget the year. It wasn't that long ago, but it actually did have quite an effect. It moved the price. I forget the exact price. I think it moved up a buck and a half or so. And it really started touching into, some into the 30s, into the higher ranges than what it had been for some time. People got excited. Lots of buying, lots of retail buying. Lots of commenting back and forth. And then, ironically, Rostam Behnam, who was temporary, I believe, interim CFTC chairman, if I recall correctly, and he was in the CFTC, forget his exact position, basically came out and said, well, we need to tamp down the silver market. These are the things that seem to only happen in the silver market. It doesn't happen in wheat or, the T-bond market or, cocoa or cotton. But silver always seems to get attention of some of the more important members of the CFTC. So basically, it did have a run. It did have an effect. It may have even scared some participants that were on the short side. And so basically what's happened is that cooled off. It kind of popped it up, and then it fell away, and not too much was talked about it. You'll see the hashtag silver squeeze from a lot of silver people on X and other places. So now it's resurrected, and it's coming back, and it's supposed to be the 31st of March, which is Monday. And honestly, I don't think it's going to have that much of an effect this time, Charlotte. From where I sit, and I've been looking at the silver market, as you know, most of my life, I don't think there's first of all, the facts are the retail market in silver is languishing, to put it in polite terms. I mean, to be dead on, I'd use the word dead. There's hardly any activity in silver. In fact, I talked to one of the main wholesalers, doesn't mean all of them, so don't misconstrue what I'm saying, people, but one of the main ones had a net negative, meaning more sells than buys in the silver market in the last couple of weeks. So people are seeing, $33, $34 silver. Maybe they bought it for, 24 and a pretty big premium, and now they're, $4 ahead. It's going sideways. Gold's outperforming. Hey, I'm out. I bought too much, or it's not moving like Bitcoin or whatever. So that's just a point of fact. The other part is, I think that most of the momentum in silver squeeze one, I'll call it, just seemed to be the right time, place, and condition. This one, to me, doesn't seem that way. Now, I hope I'm surprised that there is a huge move into silver, on Monday, and that, it does something. But these type of things are kind of like looking at the other side of the coin, where people really want to manage the price in, let's say, a certain range. Usually the effects can last for a while, but not indefinitely. And I think it's the same thing here. I really don't think there's new members in the silver community. They're going to say, yes, silver squeeze 2, I'm on, let's do it. It's a higher price. Most people are upset about the high premiums that lasted more than 6 months. And there just doesn't seem to be enough momentum in here. So I'll leave it at that, Charlotte. Silver short squeeze one good, short squeeze two remains to be determined. If it runs flat, it wouldn't surprise me. If it takes off, it would, but I'd be smiling if it did.
Yeah, it's a really interesting situation. And I'm glad that we took a look at that kind of 1.0 situation. It is important, I think, to note that this is kind of the second iteration of Silver Squeeze. So we'll keep an eye on it. We'll see how it plays out. I think also important to mention when we have these movements come up, there's always that undercurrent of wanting to address market manipulation. And of course, that's a hot topic in silver, and we've talked about it many times before. And I think what you've told us in the past is kind of like, yes, it's a problem for silver market manipulation, but all markets or most markets are manipulated to some extent. So do you see, I guess you said that this probably won't have any major effect, but can we see real change there?
I think eventually we will. My overall statement, I've made several, but the one I like to stick to the most is a market cannot be manipulated for the long-term trend. So I made that statement back in the early 2000s, and gold was 252 at the bottom and silver somewhere around 5. And so, so the major trend for both metals is up. It's apparent both metals are up from that point. But within that market, you can certainly manage the price back and forth, at times. But the overall trend really cannot be manipulated. Now, if there wasn't some management of price over time, would the price be higher? Probably. But I think the important point is to know. And the second one is in my book, The Silver Manifesto, prove to me that it's manipulated. And you have to look this up on the web, people. But if you go to Sharpe's ratio, SHARPE, and you look at what it is and what it defines, and you look at the Sharpe ratio for the Madoff scandal, the fix between London and New York is a higher Sharpe's ratio than the Madoff scandal. So I think I could convince a jury that the silver price is manipulated. But again, the overall trend cannot be. So I hope I'm clear on that. I don't want to rely on just manipulation as the only thing that is. And again, Drew, come back to you, Charlotte. You're right. There really isn't a market out there. I mean, you look at cotton or cocoa, the softs, these are commodities that very few people really pay attention to. They buy them, but they don't think about the price of cotton when they buy some underwear or a t-shirt. The point is that all these markets are run on algorithms, computer trading, and all that stuff. So there really isn't a true free market hardly anywhere. I mean, there is, but the real free market is when you put an ad for your truck in the newspaper and you're asking $6,000 for it, and somebody comes along and says, "I'll give you 5,000." I don't know, I won't take that. All right, well, how about and that's a free market. Sorry, I digress.
No, totally fine. And so we have seen this week some movement in the silver price. And I think there's, excitement on social media. Maybe this silver squeeze is having an effect. But I think then also important to look at what's going on with gold. So we have gold setting new record prices this week. So I'm wondering what you see as silver's main drivers at the moment.
Well, I'll comment on gold first. The main drivers for gold is it's a very accepted monetary base. I mean, even though the central banks really don't come out and talk about it, they've all been buying gold hand over fist the last couple of years. They treat it as a tier 1 asset and as a monetary metal. Silver doesn't have that luxury. I mean, no central bank holds silver as a monetary asset. Russia's bought some more or less as a strategic asset. But what it will drive the silver market, one is the industrial demand just keeps increasing. So we've gone from 25 years ago, 35% of the market was industrial. 25 years later, 2025, we're looking at 60% or greater industrial demand for silver. So that's one. The second one is awareness of the economic conditions on a global basis are deteriorating and that all the currencies are debasing. The U.S. dollar debasing at a less rapid rate than some of the others, but nonetheless, they're all becoming worth less and worth less all the time. So as gold continues to move up, I think it'll get out of the reach of a lot of people that are waking up to, I better do something. And that money that may have gone into gold will spill over into silver because it's better value and they feel like they're getting more, more for their money. And so I think that silver will hit both the industrial side that won't go away, and the investment side will come back in. And it is, but not strongly, as I mentioned earlier. It's pretty languishing retail wise. Commercial wise, it's pretty robust.
Yeah, I think that's a little surprising to me about that weaker retail demand for silver right now, because the gold price is already so high. You would think some of that demand would already kind of be spilling over there into silver.
I agree. If I could just interject, and this is my take, I think it had to do with these really high premiums. I mean, the premiums in gold got higher, but not crazy high. Gold premium, if you're buying in pretty good size, 1,000, 2,000, 3-4%. Silver, maybe 7, but it got to these astronomical. And I think it really kind of put a bad taste in the mouth, to use the expression, of silver investors that are current. So a new investor that would come along and say, well, you don't know anything about premiums. They're pretty low right now. They're very low right now. And they're getting, less premium to pay. But there isn't a new market out there that I can see. That's my point, is that, there's not fresh blood in the market saying, I need to buy silver. Now, there could be some institutional money sitting on the sidelines waiting to see what takes place and then coming in. I don't know. But regardless, it just seems like the silver market has been messed with so much that people on both sides are just kind of giving up. That's my take. It's obviously there's industrial demand continuing, but as far as retail buyers, I just don't understand it, but they're not there.
Talking about the premiums, so can you mention why they are kind of at those elevated levels right now?
Yeah, well, they're not now. Now they've come down, but at the time that they were so elevated, it was because there's really two silver markets. There's the silver market, and when I say the silver market, I'm referring to the derivatives market, which is commercial bars that are roughly poured 1,000 ounces. They're stamped with the exact weight and the hallmark on them, and there's only so many refiners that are approved to be COMEX delivery bars. That's the silver market. So you get a price on a derivative. From that derivatives price, you get a price that's used in the retail market, where you buy silver coins, silver bars, kilo bars, 10-ounce bars, 1-ounce wafers, government minted coins, silver medallions, silver rounds, and all of that. Now, that market's a separate market. And that market can get very tight at times. And it was. So it was very difficult to procure a lot of retail silver product for quite some time, months. And so what happens is the premium goes up. So in order to get somebody to sell it, the price goes up, someone sells it, and now they don't have that much. So they put a higher premium to say, if you want it, you got to pay this price. Happened particularly in the government minted coins. The Silver Eagle, for example, to the best of my memory, and I'm sure there's a different price I'm going to quote, but the price was X and the premium was like $14, which at the time I think was like a 40% or more premium on a government minted. And, in the 10 rules of silver investing I wrote in the early 2000s, I said, you really don't want to chase a market. Secondly, you don't want to pay high premiums. Get the most silver you can for your money. Because if you buy a silver round, it's 1 ounce of silver. If you buy a Silver Eagle, it's still 1 ounce of silver. So when you go to sell it back, and very few people talk about this enough, in my opinion, the premiums disappear. If I went into my local coin shop here in my hometown and I put a Silver Eagle on the counter and I put a silver round on the counter, I would get spot probably for the silver round, which we'll call it 33 today. I don't know the exact price. And I might get 33.50 or 34 for the silver government minted Eagle. So the premiums evaporate, but the coin dealers that were selling these weren't telling the public that at all. And now that people have discovered it on their own, I think they've been burned on the stove. They're really not that anxious to come back to the market and say, you know what, burn me once, shame on me, burn me twice, burn me once, shame on you, burn me twice, shame on me. I'm not going to get burned again. Now you're not getting burned now. But the price is high, and even with the low premium, it's like, well, is it going to go higher? I guess there's a lot of disbelief that silver is not performing. And I'm upset by it, or maybe upset's not the right word, but it's concerning. But then I've studied the market for so long, it's not unusual in the final phase, which we are in, to see gold lead the way for quite some time, and then silver plays catch up because of, a silver squeeze, a silver shortage, failure to deliver, a problem in the COMEX, LBMA doesn't deliver, silver, incorrect grade, 90% instead of 999 fine. I mean, there's all kinds of things that could happen, not predicting any of them, but it wouldn't be surprising in the next year or so that something along those lines does occur and sparks a silver market, and all of a sudden it's off and running. Silver surprises anyone, even yours truly, and I've been in it for a very long time, because something that you don't think of, or all of a sudden it's just a sleepy market not going anywhere, and all of a sudden it shoots up and no one knows why.
Yeah. I think it's so important to keep a close eye on things, but sometimes something that you don't even expect, as you mentioned, comes out of nowhere. So taking a little bit more of a look at the price, I know it's pretty hard to make a prediction about the price when times are very volatile and uncertain like they are, and when you can have these black swan things going on. We had talked back in November, you mentioned maybe $40 or so silver in 2025. Are you still feeling like that's the right number for this year?
I think it could get there. I say could, not would. Really, in stocks and commodities, particularly in stocks, there's what's called overhead resistance. This is what technical analysis or charting is all about. But if you sold a bunch of stock at $10 and it drops to $5, and when it went from 10, it sold a lot at the $8 level, and then it went to $6, it sold a lot at the $6 level. That would be upside resistance. So as it goes from 5 to 6, a lot of people that bought it at 6 will sell it to break even. And that's resistance to move it back up. And then it gets to 8, and a lot of people that bought it at 8 will sell it because it's a break even. And then it gets to 10. People are now where they started, so they're probably going to hold, maybe sell a little bit. Once it goes above 10, it's at 11. It's an all-time high. People have no resistance. People hold it. Say, my goodness, I'm not going to profit. How high is it going to go? They start to get a little bit greedy. Then it goes to 12, and I'm not selling. It's going higher. And so there's no upside resistance. Any new buying takes the price higher and higher and higher until finally people start to cash out, or some market conditions change, or whatever. That's the situation for silver above 34 or so. And we're there. We're just starting to get there, but there hasn't been that move that I expect, where there's some resistance, for very low resistance, practically none for practical purposes. So this is something I'm anticipating that could take it from 34 to 40, maybe not stay there, maybe go beyond it. I don't know. But it's not acting like a market that has very little resistance. And the reason for that is there's massive short positions in the silver market, not only in the futures, but also in the ETFs. And there's a lot of borrowing going on in the ETF markets to short the silver. I think the short, to me, I don't want to be too enthusiastic here, Charlotte, but it appears as if the shorts may be getting sweating a little bit right now. Big short positions, no real ability to cover because they can't seem to get the price down substantially enough to cover their positions. When they do want to cover, it pops the price back up. And I'm not saying it's different this time. I mean, I've been through this so many times, and so many people get excited, and it will happen. It's going to happen. And on it goes. But the setup looks very interesting, especially going back to the beginning of our conversation. Silver squeeze. What if 31st, some big players? By the way, I forgot to mention, forget his name. He's on X. Popped up in my feed this morning. This individual bought a large amount of physical silver. I actually typed something to him. What his remarks reminded me of what Bunker Hunt said early on. And I really believe Bunker, at least in the beginning. He wasn't there to try to, control the silver market. He was worried about inflation. He was worried about the depreciation of the US dollar, and he just wanted to protect his savings. And that's basically what this guy said. And so I wrote him and said, hey, that sounds familiar to me. So.
Yeah, I think I saw the same post as you, so pretty sure I know what you're talking about there. So that gives us kind of an idea of what's going on with the silver price. I want to look at the gold price as well, because as we mentioned, it's at all-time highs this week. It's getting pretty close to that $3,100 level. And I'm wondering where you talked about support resistance for silver. How's it looking for gold? Do we need to take a breather here, or what are you thinking?
Well, it's always good to take a breather in any market, futures or stocks, whatever. But gold is continuing to make nominal new highs. And there's just what I outlined. Everyone's holding at a profit now in any currency. So there's reluctance to sell back. So there's not any real resistance going up. So any new buying is going to take it higher and higher. The banks certainly aren't selling. The LBMA situation looks like it's been pretty much resolved basis the activity that we're seeing from London and New York currently. And yet, we keep seeing more and more price pressure to the upside. So, where's it going to go? No one knows for sure. I mean, lots of people in my peer group are looking at 4,000, 5,000, 10,000. Couple books, $10,000 gold. You can't rule these things out. You're not going to get to 10,000 until you make it past 4,000. That's the way I look at it. But gold has certainly got the limelight. And this is not unusual for the end of a great currency crisis where the reserve currency of the world, i.e. the US dollar, is starting to lose its status. I mean, all transactions globally used to be, I think it was 72% basis the US dollar. Now I think it's less than 60%. You've got the BRICS intervening. They're trading goods and services vis-a-vis their own currencies, circumventing the US dollar. You can buy oil outside of the US dollar now. The treasury market is not as robust as it once was. People of means, looking at the banks and the international community, sovereign wealth fund, big players in the monetary sphere, seeing that maybe the US dollar at a long-term basis, a 30-year bond, 2010, maybe even shorter durations, 5 would say, I don't really trust that thing for that many years. I don't think I really want to buy much. So all these factors, and where's the one safe, sound, long proven investment to protect the purchasing power, and that's gold. And because of that fact, you're seeing, as I said, central banks buying it robustly the last couple of years, and that's spilling over into some of the pension funds, it's spilling over into some of family offices that maybe were putting it off. You're seeing probably a rotation out of the stock market into hard assets, gold being probably one of the leaders. And so on and on it goes. The case for gold really couldn't be better than it is right now. But having that, knowing that, and looking at sentiment that drives markets more than most people think, to me, it's like, well, gold's actually due for a breather here. But that doesn't mean it won't continue to go higher and higher. I think it will. Whether it'll take a breather or not, we'll have to wait and see.
We'll have to wait and see. And yeah, I always feel a little bit better when things take a breather or a pause. It just makes me feel a little bit more secure, but we'll see what happens. And okay, talking a little bit more about this shift away from the US dollar. We've got so many things going on right now in the US now that we've got Trump beginning his second term. Is that shift from the dollar, do you see it accelerating right now in these next 4 years, or how do you see that playing out?
Oh, great question. Yeah, I think it will accelerate in the next 4 years. I'm glad you said I think we could 4 days or something. No, I really think within 4 years that we may see some type of new monetary system, or maybe a dual system where we keep the current digital dollar with our Visa cards and all that, and at the same time see perhaps a privately issued digital currency that you could use that's issued by, let's say, a major bank and not necessarily the Federal Reserve. Maybe run them in parallel and then get people to switch over because it's more efficient. There's less friction. You're not paying a 2% merchant fee. If you use your Visa card, you're only paying 0.2%. If you use the new digital currency issued by JP Morgan, whatever. Or just move the system away from the current one and move it into some type of digital currency, Fed coin, whatever. It wouldn't be Fed coin. That was more or less an experiment. to work pretty well. And so this is what I anticipate, a change in the monetary system. And I think, I would say it's imminent, like it's a week from Tuesday, but I think it'll be before Trump's term is up. I think there'll be some type of financial crisis, a major bank that goes down, maybe a major hack to a money center bank, something along those lines that will be that moment in time where the monetary authorities on a global basis say, we've got to fix this problem. Here's how we do it. Go get a digital ID. Now that you have your digital ID connected to your present bank account, that will be moved into the new system. It may not be that exact scenario, but there'll be some situation that will take place that will force most of us to move into a more centrally controlled, monitored system where basically cash becomes meaningless, which it almost is now anyway. But it'll probably be where that's the plan, where it's all digital. Every transaction is seen. Every transaction can be traced, taxed at point of sale, and what you're doing with your money can be monitored. I think that's the direction we're going.
Yeah, and I like how you outline ways that this could play out, because when we talk about these monetary shifts, I always struggle to visualize what that actually means. And of course, it can be different, but it helps me to see how you think about it. And I remember when we talked back in November, you had mentioned this increasing government control and oversight and essentially threats to freedom that you see developing. I wondered if there's anything that you might add there. I was going to ask if you feel better or worse than you did then, and it sounds like maybe a little bit worse about that whole situation.
Well, some days I'm more cynical than others. But there are states that, basically have put up legislation to be anti-CBDC. So they don't want a central bank digital currency. I haven't read them, so I'm speaking enough of an educated guess that I don't think that they restrict a private digital currency, but perhaps they do. But there's a pushback. I mean, there are people that want and value freedom. And of course, some of the bankers say, well, you're going to retain your privacy, but I don't believe them. I mean, they might keep your transactions private until it's necessary for them to open them up. In other words, they'll know every purchase that you make. And let's say, for example, they tie it into a carbon credit score as an example. And all of a sudden they determine that I'm traveling too much, seeing, my aunt, and they restrict that because, you're just burning too much carbon going to visit her every other week. Therefore, you can't do that. Well, how private is that? It's really none of their business, in my opinion, how often I visit my aunt. But it is to them, they can make it their business. So these things really upset me, Charlotte, as you know. I mean, I'm also for freedom of free markets. I'm not for, Big Brother telling me what I can and can't eat, where I can and can't go, and that type of thing. And I may be off on that. I mean, I may be a bit extreme, but, I've been around so long, I've seen what's called the slippery slope. And once you give them a little bit of power, it never goes away and they keep adding to it. And that's the same thing with inflation. You start off, just a little inflation. Well, that's good. There really isn't such a thing as good inflation. But in the beginning, it looks like it. And then it gets bigger and bigger and bigger. And finally gets to the point where people don't know what to do. They don't trust the currency at all. And a new system is installed.
Yeah, I can see certainly the level of concern there. And just going back again to that November conversation that we had, you told us about your upcoming Silver Sunrise documentary. So I wanted to check in with you on that as well and see where you're at with that.
Thank you. Yeah, well, all the filming is done, and it's being put together in the final phases right now. So we're still looking for donations. I've funded a lot of it, and we'll get done one way or the other. But I'm really anxious. I've seen the B-rolls, meaning the rough cut final version, and pretty happy with it. I think it gives a new idea about how much fear and control the monetary powers have over us. And that really we in and of ourselves have a lot just by the human experience. And money's important. We can't get around it. We can't do without it. But there are other ways to think about it. And there are other ways to think about ourselves and realize that maybe the most important value isn't what we have outside of ourselves to make us feel better with a big house or a big car, or, certain clothes, or, dining out, or whatever the case may be, to look more interior into what we already have and how powerful we really are, what our creativity means, and what our communication and connections with others means. And the old adage, it sounded corny to me when I was a greedy little 20-year-old, but now at my age, it is better to give than receive. It doesn't have to be monetary. It can be lending a helping hand, or helping somebody move, or being there when they need it, or listen to somebody when they're hurt, or whatever. So the point of the film is to kind of reset what's the most valuable, what's the least valuable, how valuable is money? Is it, has it become your God and you don't even realize it? And so those kind of questions, I don't have a lot of answers, Charlotte, although I pose a few. But I think the main idea is, what I want is for people to walk out of the documentary and say, wow, that guy really made me think, and not me, but all these people that have helped contribute to this film.
Well, I will look forward to when that comes out, and we can put the link in the video description so that people can learn more about it. I'll let you go for now, but before I do, any final thoughts that you would leave investors with? I know it's very interesting times right now.
I think the number one is the allocation model shifting. And these are big changes. Mike Maloney refers to it as wealth cycles. There's a time when you should be in real estate. And then there's a time you should get out of real estate and switch out of real estate into, say, the precious metals. And then there's a time to be in precious metals and ride that and be out of stocks. And then there's time to be out of precious metals and into stocks. And I think we're in an allocation shift now, Charlotte, where it's going to be a time to be out of stocks and into gold and silver, and maybe commodities generally. So I'd leave with that.
I think that's a really good place to wrap up. So thank you so much for coming on to explain what's going on in silver and gold as well. Always really good to talk to you.
Thank you, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is David Morgan with the Morgan Report.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.